Many people know that the IRS gives you a tax break for giving to charity. But in this video, we're going to talk about the steps you need to take so that your deduction doesn't get disallowed if the IRS asks about it. And as a bonus, we'll even go over how to calculate just how much your donation will save you in taxes. Let's get to it. Welcome to Tax Chit Chat, the place where we talk all things tax all the time. So when it comes to getting a tax deduction for your charitable contributions, the IRS has some specific steps you need to take. The first place we recommend starting before you make your donation is to research the charity on the IRS's website. In order for you to get a tax deduction, your donation must be made to a qualified organization. Now, most charitable organizations are governed by Section 501c3 of the U.S. Code. This is why most of them are referred to as 501c3s. Most religious, educational, and charitable organizations fall under this category and can receive tax-deductible donations. But unfortunately, money spent on things like bingo games, raffle tickets, or lottery-based drawings used by organizations to raise money typically aren't. Likewise, community drives through sites like GoFundMe or Kickstarter aimed at helping an individual or a family with medical costs, loss of a house from a fire, or funeral expenses also usually don't qualify. To make sure you're giving to an IRS-recognized organization, we recommend using the IRS tax-exempt organization search. Check the description below this video for the link to that site. Now, the next thing you should do is give your cash and value your goods. The next step is pretty straightforward. So simply give your cash and you value the goods. The best approach for giving cash is to do so in a way that allows you to track it, meaning use a check, credit card, or ATM card so the transaction shows up on your financial statement. If you give goods, you just want to make sure that you itemize, track, and value the goods you are donating. Many organizations have donation guides to help you determine the value of your item. What we often tell people is to think of how much the item would be worth at a yard sale or a garage sale, and that's about what the IRS will allow you to deduct. Check the description below this video for a link to the donation value guide provided by the Salvation Army. The next thing a person should do is get a receipt or an appraisal if needed. The IRS requires that you keep records to prove the amount of the contributions you make during the year. This is why we mentioned using something that gets reported on a statement when donating cash. Now, if your donations are less than $250, then the documents we mentioned will typically suffice. But if you make a contribution of $250 or more in cash, you will need to get a written acknowledgement of the donation. Now, don't worry, most charitable organizations will either send you an acknowledgement immediately after you give or at the end of the year, as often happens with religious organizations such as a church, mosque, synagogues, and the like. Now, in the case of goods, the documentation you need will depend on if the donation is less than $250, between $250 and $500, between $500 and $5,000, or over $5,000. The key on this is that you need an appraisal if you give goods valued at more than $5,000. Check the description in this video for the link to IRS Publication 526 and then refer to the section for substantiation requirements, non-cash contributions for all the details. So the next thing you'll want to do, include your donation on your tax return. In order to deduct a charitable contribution, you must itemize. And to itemize, the deductible total of all things such as medical expenses, state and local taxes, mortgage interest, and charitable contributions must exceed the standard deduction for your filing status. With the tax law changes that took effect back in 2018, many now find that the standard deduction is much greater than their itemized deductions. Thus, their charitable donations no longer give them a tax benefit because they no longer itemize. But I've got some good news for you. For your 2020 tax return, the one you'll be filing in 2021, lawmakers are allowing you a special $300 deduction for giving to charity. The catch is that it's only available to those who take the standard deduction, and the donation has to be in cash. There is no deduction for goods donated. In order to deduct those contributions, you have to itemize. Just make sure you donate before December 31st, as that is the deadline to get it to count on your tax return. And now for the added bonus we talked about earlier in the video. How do you calculate the tax impact? So just how much will your giving get you in terms of a tax break? Well, it largely depends on your tax bracket. There are currently 7 tax brackets that apply to individuals. These are the 10%, 12%, 22%, 24%, 32%, 35%, and 37%. Woo! That's a lot. So to see the tax impact of your giving, just take the highest tax bracket for your income level and multiply it by the value of your gift. in the 22% bracket and give $1,000, your giving will save you $220 in taxes. In the 37% bracket and give the same amount, your gift will cut your tax bill by $370. So as you can see, the more you give or the higher the tax bracket, the more it benefits you on your tax return. Now, if you have a question that you would like us to answer in a future episode, then feel free to shoot us an email via the address in the description below. And did you find value in this video? Then please consider giving it a thumbs up or subscribing to the channel. Just make sure you click on the little bell icon when you do. That way you'll get a notification whenever we upload a future video. So until we meet again, I encourage you to keep earning, keep learning, and just like that, this chat is adjourned.